I don't know how many people even, look at Cisco stock really, but it's one that I carry in my portfolio, so I wanted to talk about these earnings results, okay? We got to talk about the earnings results for many reasons, right? Cisco fell 6.5% after hours. How many people are going to be looking for these earnings? I don't know. But whoever is, I got the deets for you, okay? I got the good stuff. Let's look at these earnings. Oh my gosh, I forgot to unzoom out. Can we please reset the defaults, folks? Please, let's reset the defaults. Okay, for Q4 here, look at this. Non-GAAP EPS of 80 cents beats by 6 cents, and a GAAP EPS of 62 cents beats by 1 cent. Good for them. I mean, that's quality stuff as far as a top line is concerned. Good numbers as far as that profitability is concerned. We'll take it. Revenue saw a 9.5% decline year over year, $12.15 billion in revenue, beats by 60 million, or really flat is what I would say. Now guidance is where we get a little interesting, right? Guides quarter one EPS of 41 cents to 47 cents versus a consensus of 75 cents, and revenue of a 9 to 11% decline, which implies 11.7 to 11.98 billion versus a consensus of 12.23. And that alone, we see the exact reason for this stock to be off, right? That's why it's trading off after hours. It's because that guidance, and it is crappy guidance compared to consensus. And investors are just hammering down on this thing right now. They're telling it, hey, you get out of my territory. I don't want to see you. We're going to give you the smackdown, Cisco. Give us bad guidance. We will give you bad reviews, says the Yelp reviewer. So overall, security was again a bright spot as revenues showed a 10% gain in the security segment, but its core infrastructure platform business dipped by double digits. The company achieved its goal of drawing more than half of its revenue from software and services, which is good. It's a good portion of this business for sure, and seeing where that goes. From the CFO, Kelly Kramer, we executed well in Q4, delivering strong margins despite the challenging environment. Software subscriptions now make up 78% of our software revenue, and the remaining performance obligations continue to grow. Pretty nice. Revenue by geography. I like that they mentioned this here. And the Americas down 12%, EMEA down 6%, and Asia Pacific down 7%. So declines everywhere around the world, no doubt. By type, we saw infrastructure down 16%, which is the biggest portion of their business. But in my perspective, that security and services, I believe, are going to be more dominant in the future. But applications saw a 9% decrease, security saw a 10% increase, others saw a 17% decrease. Services was 3.32 billion. Terrible guidance, I think, is a good reason here. We also found out that Kelly Kramer is retiring, as we just heard from her. Kelly Kramer gave notice today. She will serve under the role until a replacement is named. So good for them. We have a little earnings result to look at here. We'll look at the earnings report. Again, we're not going to pass out, okay? We're not going to fall asleep. I don't want to waste my time and be another casualty of society. That's what they always say. So, for full year, which I do like to look at that, full year they did see a 5% decline year over year, with over half of their revenue in software, from software and services. Good to see them hit that target at least. GAAP EPS increased 1% year over year for the full year, which is pretty nice. I mean, in my perspective, I'll take a win, right? I'll take a win on anything. For the full year to see a GAAP increase, we'll take. Even though there were two bad quarters in here, we are all for it. What else would we like to point out on this? Because I certainly like to point out a lot, right? net income overall saw a 5% decline, but still posted a $3.4 billion net income. That's beautiful numbers. I do like to see that the company's bringing home that cashish. That's what I call a nice net income line compared to your $50 billion, annualized revenue. Putting up $11 billion this quarter. I like to see you bringing home $3 billion to the bank, baby. That's what I'm saying. Net income for the full year was also down 1%, $13.7 billion, which is nice. $13.7 billion compared to an overall revenue line of $51 billion. Good numbers there. It's a good number there. That's my perspective on the matter. I like what they're doing, and I love seeing it. Next, I think I am going to obviously skip over the guidance, because guess what? We saw what the guidance was going to be, and it's not beautiful, right? The stock's getting hammered for it. I do want to look at the balance sheet on Cisco, and we can move on, because obviously you bring in a net income. I want to look at that balance sheet and see it grow. Now, we did overall, we're looking on the left-hand side, by the way. This is one of the few companies where you see current assets actually saw a decline, and cash and cash equivalents also really didn't rise at all. This company didn't need to bring in extra cash to survive, which is good. Total current assets of $43.5 billion versus $47.7 of a year ago. I like a year ago comparison too. I really do. Total assets of 94.8 versus 97.7 of a year ago. I want to see that liability line decrease. I'm really hoping they paid off some stuff, but it's hard to say in this current environment. We look, and to be honest, I do see some growth here, and I love to see it. Total current liabilities of 25.3 versus 31.7. That's a good decline of $6 billion on that. Total liabilities in general, 56.9 versus 64.2. Again, a quality. Really, I mean, that's another $6 billion, nearly seven. Really a little bit over $7 billion that they declined or decreased liability-wise. So overall, stockholder equity saw a nice rise, actually. Nearly $38 billion of stockholder equity versus $33.5 a year ago. So the company's still doing well, all things considered. I like that net income line. They're bringing home a lot of cash, and that's what I like about this company. They're a super consistent dividend payer, which they can definitely continue to be with a balance sheet looking like this. It's a strong balance sheet. Strong balance sheet. I mean, what else can you say? I like what's going on. I like the stock under $45, and just so you know, it reached that. I like the stock under $45. I've got it in the 38 range as far as cost basis, but I buy more at under 45 at this rate because it's a good dividend play right now, even too, because the company's doing well. I like the company. You can say what you want about it, but under 45, I'm a buyer of this company. I believe in this company for sure. All right, now I'll officially fall asleep, and I'll wake up in the morning, and this video will come out, and we will be looking good, and I'm going to not be tired.